things that I get asked a lot about is, how do you trade the S&P, Raghee? So let's talk about the 3 ways we can trade the S&P, and it's very much a choose your own adventure type of conversation. There's no right or wrong, it's just which way do you want to look at it. But I will share with you an edge that I've gotten in trading any variation of the S&P. So the touchstone of the S&P is absolutely the futures contract. Now, why do I say that? Because a futures contract trades with liquidity 23 hours a day. So you're going to get a nice running start in the morning going into the 9:30 bell. Even 8:30 Eastern, you'll get a nice running start because the S&P has already been trading. You can see what happened in Europe, the UK. You can already see what's happened in Asia, what happened in the early part of the US session at 7 a.m. So you get a good idea of what was happening before the 9:30 bell. Again, that 24-hour type view. There's, of course, the micro. There's the SPY, which is the ETF of the S&P, but this is more of a 9:30 to 4 conversation. So if I want an edge in the S&P, I'm going to look at what did and let's say I'm trading the SPY or options on the SPY. I'm going to get a feel for what the SP was doing before the bell, right? At 7, at 8, at 9, and I'll get a feel for it. And then, of course, there's the SPX, which is probably one of the most popular ways to look at the S&P, but it's not as if the SPX provides something separate than those others, right? Same thing. If I want an edge on the SPX, I'm going to do so by looking at the S&P. And then once I've got this ES, when I say the S&P, I'm really talking about the ES. So once I know what the ES is doing, I can choose my own adventure into SPY or into SPX or even into micro if I want to go that route, which frankly, I don't care much for the micros. They're great. Don't get me wrong. I think they're a great way to take a small step into S&P trading, but I'd rather, frankly, most new futures traders start with SPY puts and calls. Get a feel for the S&P via the slower, less expensive SPY puts and calls. Slower as in less leverage, less dollars per point, and then graduate from SPY puts and calls to short and long positions on the S&P futures. And I mean that mini, right? That's my preference. So let's go to, for example, a lot of folks ask, Rog, do you trade the SPX? I really don't, but if I were, how would we do this? So let's do this. So first of all, when I'm trading any symbol, let's talk about something as basic as what's the data we're starting with. I'm going to use the extended hours. And you might say, Rog, why use extended hours? They're not really liquid. But think about it this way. Every indicator that we use is usually accumulation of, and let's use something really basic, like a 200 period exponential moving average. I need 200 periods to calculate this thing. So by having data in the sort of pre-market before the bell rings, I've already got information. And this can keep plotting once the bell rings. So I get at least I get something populating before that. I think there's value in that despite the low volume. Same thing with the futures. I'll get that extended hours on, right? Okay, so now I want that running start into 9:30. Take a look here at Thursday to Friday. Look at the jump here. This jump exists on the SPX because there's nothing going on here. But if I want a little bit of an edge on the SPX, see this, I have no information from 4 p.m. to 9:30 a.m. Trade the SPX, that's cool, but start here. Okay, we have a lot of traders in the Sector Secrets Mastery and in the futures room that like SPX, cool. But start with this edge. So let's go to that same situation with the Friday morning, right? Look at what I've got here. Let's go back to, here's Thursday. Let's go squeeze in a Thursday close. See, SPX stopped there. But what do I know that happened before 9:30? So 9:30 is basically right here. Okay, right in here. What do I know that happened? I have some highs, lows. I can see what price did before it got to the bell. So I know we kind of did a climb higher, but there were some lows here. I know that we're opening near the pre-market high. So I just have a little bit more, rather than a big hole in the chart, I can see why and how we climbed up to that opening price. And I know that right before 9 o'clock, we were a little bit neutral. We had a brief period of time that were bullish. It's not as if the S&P didn't wobble a bit before the open. That's not a reason for me to be bearish, but at least it's going to give me some insight pre-market into, well, there's been a few wobbles throughout the morning. The S&P has had a little bit of selling pressure, driving it back to neutral. So these are things that we can know if we look at the ES before we trade the SPX. All right, the other thing that I can do is look at some of these Darvas levels. These are automated support and resistance levels. There's 2 Darvas, by the way, gang. I've made this tool available to members for a really long time. There's our Darvas 2.0. What is that called? Why 2.0, Rog? What happened to 1.0? Hey, the 1.0 was Nicholas Darvas himself, right? There's Nicholas Darvas. He's 1.0. 2.0 is my way of sort of this homage to someone I was a big fan of growing up as a trader. Read the $2 million book, right? Read a lot. I actually have 6 of Nicholas Darvas's books. Big fan. And 2.0 is my way of saying, hey, we all stand atop the shoulder of giants. Nicholas Darvas, certainly one of them. One of those up there with me, with Charles Dow, to be quite frank. So by using a process that he created in the 50s, right, and modernizing it for today's markets, this is very much rooted in the patterns and the process of Darvas boxes, but really more applicable to the kind of trading that we do now, not in 1950, not in 1960, when Nicholas Darvas was doing most of his trading. So I've got these automated support and resistance levels. And then the Darvas 3.0 is going to add a pattern that is part of a Darvas box. Most people don't know this. And it's the minor high and minor low pattern. So I add that to the Darvas 3.0. You don't need it. I don't want anyone running out and thinking they have to go buy a Darvas 3.0. Use the free version first. Get these automated support and resistance levels on your chart. You're going to realize how amazing they are. We're talking about Darvas in 2023 when this guy was trading in the 1950s. 73 years later, we're still talking about the guy. Why? Because it just has stood the test of time, right? So again, Darvas 2.0, fantastic. Now, if I know this is where support and resistance is as we're going into the morning, right? I can see this automated zone. I can immediately start to get a feel for what it is I might have to deal with on SPY, on SPX, right? So use that edge of, rather than waiting, get an idea of where the zones are. Now, these zones are going to continue to plot. Here's my resistance. Here's my support. We never were able to take that resistance out. How bullish really is a market if it can't get above the first, this resistance level of the morning? I mean, is there a lot of bullishness if this Darvas level is holding? Probably not, right? I don't know it's going to be an overall down day yet. I just know resistance is an obstacle to further upside. Here's another cool tool to use, and you can do this manually. Yes, I've automated it, but you can do this manually. All right? Take the high and the low of the first 5 minutes. Take the high and low of the first 5 minutes and cut it in half. This is your Pingala. All right, what do I call it, Pingala? Fibonacci, I know, which is very popular and awesome. Really comes from Sanskrit poetry from a guy named Pingala. So I like to call them Pingala levels, right? Just for some fun. But it's true, okay? Cut that range in half. This range represents the 2.8% and the, 32.6 and then 61.8. It's 32 and 61, okay? And right in the middle is the 50%. That's why I say cut it in half, all right? So that's another thing you can do. Notice that we had a very difficult time getting above that level. Here, let me clean this up a bit. So let's take a look at that level. This is that Pingala. 5. I know this at 9:35, gang. So we can know what this level is at 9:35. In the premium video, gang, I'll get into how I can know this from some earlier 5-minute Pingala levels into the bell, right? But let's start with this one. We can all know by 9:35 a.m. Eastern time. Look how hard a time price had getting above it. So not only did Darvas keep it in check, but so did our Pingala, right? Again, not knowing how the day was going to unravel. But if you can see those things early in the morning, and then you start to see price slip below key levels, really cool key levels. Like, what's a really cool key level that everyone can put on their chart, which doesn't need any paid tool, no automation. One of the coolest things you can put on your chart. Really simple. I've been doing this literally since I was a teenager. Okay. Know where the previous session closes. So I'll just put a manually drawn line and I'll just call it the PSC, right? And I'll put that right on my screen. When did we cross down through the previous session close? When did price action have a hard time with this level? When did things really start to unravel? When we got south of that level, okay? But if I'm looking at all the cues before then, this was setting up for a short. I'm not trying to see into the future. I'm just trying to take all those cues that price action is giving us if we can mark certain levels on our chart. All right, gang? So hopefully this helps with your S&P trading, your SPY trading, your SPX trading. And then as the day goes forward, let me show you one last thing before we go, because I get a lot of questions about SPX. So let's talk about Darvas and let's talk about hourly price movement ranges. Take a look at my Darvas right here. My Darvas was at 42.88. Okay? And that was in place as of just after, see this low right here? That was in place just after 3 p.m. So there's my Darvas there. And if that isn't enough, look at my, right here, look at my hourly price movement range. So that was support. That was where price action was likely, on the low side of things, going to spend some time. So if you're struggling to find zones and levels, right? In this case, I'm talking about the way in which you can trade the SPX and the ES, right? All this is also emanating from the ES. One last thing. I know I keep throwing things in here. One last thing. We were south of the 200. A little bit more bearish. Am I going to expect price to travel down to support or travel up to resistance if we're south of the 200? I'm going to expect prices to travel down towards support. These are all repeatable things that we can all recognize on our charts. And by the way, that's a pretty cool level setting up next week. Right into the daily price movement range on the SPX. I am very bullish about October. This could be a very cool start. And by the way, have we seen a bounce from here before? Take a look at my Darvas doing its thing with its signal. There's that little arrow, and there's the daily price movement range. Something to think about. And if I can see that on the S&P, once again, choose your own adventure. So I hope this helps. Darvas plus S&P, pretty cool SPX levels. I'll see y'all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.